This pharma stock just posted 30% revenue growth, crushed earnings estimates, and secured patent protection through the next decade. Yet it still trades at a trailing price-to-earnings ratio under 13. Let's break down HRMY Biosciences, ticker HRMY, on the NASDAQ. HRMY shares trade around $39.25, near their 52-week high of $40.87, giving the company a market cap near $2.3 billion and a trailing price-to-earnings ratio of just 12.7 times. Unusually cheap for a growth biotech. Second quarter 2026 revenue came in at $261.3 million, up 30% year over year, driven entirely by Wakix, the company's only marketed product. GAAP diluted earnings per share hit $1.28, crushing the 97-cent consensus estimate by roughly 32%. The stock jumped about 9% on the news. Management reaffirmed full-year Wakix revenue guidance of $1 billion to $1.04 billion, a milestone that would make Wakix the company's first blockbuster drug. Wakix, also known as pitolisant, is a first-in-class treatment for narcolepsy that's currently HRMY's entire revenue base. That single product concentration is the central risk here, but the pipeline is starting to diversify. A gastro-resistant formulation, pitolisant GR, already has its FDA application accepted with a target decision date of April 1st, 2027. A high-dose version is in phase 3 testing, and a rare pediatric epilepsy drug called EPX-100 has phase 3 data expected in the first half of 2027. On report day, HRMY also released encouraging early safety data for BP205, a new orexin receptor drug being tested across multiple neurological conditions. Here's a quiet but important catalyst. Back in June of last year, HRMY settled patent litigation with generic drug maker Lupin, blocking a generic version of pitolisant from launching before January 2030. The company is also developing next-generation formulations that could push that exclusivity window out toward 2044. The balance sheet is strong, $549.8 million in cash, plus investments pushing total liquidity to nearly $963 million, with no notable debt. One thing to watch. Alongside the strong earnings pre-announcement in July, HRMY also announced a CFO transition, a leadership change worth keeping an eye on. Wall Street rates the stock a buy, with price targets ranging from $25 to $72, averaging in the mid-40s, implying real upside if the pipeline delivers. So is this a cash-rich blockbuster in the making trading at a bargain multiple? Or a one-drug story with a valuation that only looks cheap until that single product hits a wall? Not financial advice.